Good morning to all traders and welcome to today's market insights video on FX majors. It is the NFP day, so most likely we're going to see markets being a little bit thin ahead of the event. That's of course an assumption because we've seen surprising moves sometimes prior the event, which is pretty much just the pricing in of the expectations. We might see that today, maybe not. The ADP was worse than expected yesterday. However, the previous month's figures were revised upwards, and not just the revised. They weren't negative any longer. They're not negative any longer. And now, whether we should take the ADP with a pinch of salt, though, that's a different story. I wouldn't really be, making forecast based on ADP on its own. So I will be looking at other indicators as well. We've had the ISM also improving above the contractionary figure of 50 in the US. And other data as well in Europe also supported the euro. Whatever the case, though, the thing is that dollar was not supported by the economic data. It might be because of the expectations, but of the employment numbers. But I think it's because we've actually seen the US daily coronavirus cases now jumping by more than 50,000 for the first time. And that's obviously for a daily increase. It's a very, very big number. Today, we're going to look at euro dollar, the dollar yen, as well as the pound dollar. Now, when I start with euro dollar, I still remain, I would say in the medium term, bearish, because we are still expecting this to be a W, X, and Y, which is going to be a part of the intermediate Y wave down to fresh lows, right? Last week we looked at this ABC and then this as an X over here, okay? And then we're expecting another wave, another ABC down here to complete a W double zigzag. However, with these new formations taken into place over the past few days, I moved X wave over here and I look at this as an ABC, okay? I'm expecting this to be a flat. We've had a W, X, and Y over here as a complex pattern on wave B, in wave B, and now I'm expecting this, since this is a 5 move to the upside, I'm expecting this to be a 5 move to the upside as well. We could go to previous highs of 113.50, or even to take out the 78.6 Fibonacci retracement of wave W, which is around 113.68, right? Now, of course, we could see something else happening. That wouldn't be a surprise. But at the moment, and since we have also an RSI signal popping down on our RSI and it looks bullish, I'm seeing more upside for the euro dollar in the short term. Now, don't forget, as I said before, it's the NFP day, so we might see markets consolidating and being quite thin. Now, on dollar against the yen, last week we also saw this because we're expecting triple zigzag, right? So W, X, Y, X, and we're expecting wave Y. Last week we talked about this becoming an A, B, and a C. It looks like we've had wave A done between the 1561.8 Fibonacci of, wave X, and now we're expecting wave B. Now, I'll be honest, I mean, we did see this decline over here, but I'm expecting another move down. And that's because I want to see another signal, hidden divergence over here on the RSI, okay, and prices in order to go higher. And that's going to take us probably down to 107 or so. However, a slight upside can be expected to around 107.60 or 70 or so before we see wave B, and then, of course, a continuation to the upside. And last, pound. Although I do not like the this move down here, right? Because we're looking at this being an end-end triangle, right? Which means we'll see prices. Well, I'm still looking at this with a same point of view, pretty much. It's just that another move to the downside. So I'm expecting now This is probably wave A. We're expecting wave B and then wave C up to around 128.30, or anywhere up to this move, up to this trend line, right, around 131 or so. But as I said, I'm not really a fan of this move. I do see mixed signals as well on the RSI. We've had a very good upside move from the low of 122.30 or so, and now, since we've had this move to the upside, now we are seeing a bias on the RSI that is to the downside. So yes, indeed, 125 might be a good level to short, and then look for prices to move up again for a correction. Now, the other case I'm looking at, because I was looking at this morning, and well, due to its corrective structure, I was looking at this also potentially being an ending triangle in wave C up here, right? Which means that this is 1, 2, 3, 4, and we're going to see again an ABC to the upside, which is pretty much another ABC to the upside. However, this scenario is looking at this being an ending triangle rather than anything else. And then last case is that we've ended this move to the upside with an ABC, right? And this is now a wave 1 as a leading triangle, because it's looking like a good leading triangle. And then we're going to have A, B, and the C, which means we're going to go around 126 or so, 126.60, and then start moving down once again. So this will be all for the day. Thank you for watching, and I will see you again tomorrow.